I often get asked the question from newer investors, if you could only hold on to one long-term ETF position forever, what would it be? And although my answer to this is not necessarily the correct answer, and this is because my investing goals, risk tolerance, and outlook is going to be different from the next. But that being said, I still do have a certain ETF in mind which I would choose, if I in fact for whatever reason could only choose one ETF to hold on to forever, and this would be the SCHD ETF. Now in this video I'm going to explain why I would choose the SCHD ETF as my one and only holding if again for whatever reason I was only allowed to hold on to one holding. Now we are going to go through all this and more right after you please drop a like on this video and subscribe for more content like this in the future. Now some of the questions that get tossed around a lot on the internet, in the stock market investing side of things of course, are questions like what are your top holdings, what is your favorite stock, or what is your favorite ETF? And although at first these types of questions might seem a little bit simple and surface level, I do happen to think that these type of questions asked to a seasoned investor, or someone that's been investing for several years, let's say 5 years or more, I do think that the answer that the investor would give to the questions like this could be profound. Now, my most obvious reasoning for this is that if someone were to have asked me questions like this at the start of my investing journey, which was around 7 years now, I am certainly going to give a much different answer, and my answer today is going to have some depth to it. But now the reason that I would choose SCHD as my one and only holding for an ETF is because of several reasons. For one, the ETF strategy, the ETF's performance so far, although it hasn't been around all that long compared to some of the other popular ETFs out there, and of course SCHD's strong dividend history and dividend growth. But before we go any deeper, let's talk a little bit about what the SCHD ETF actually is. SCHD, also known as the Schwab US Dividend Equity ETF, is a popular exchange-traded fund that aims to provide investors with an exposure to high-quality US dividend-paying stocks. The fund is managed by Charles Schwab Investment Management and seeks to track the performance of the Dow Jones US Dividend 100 Index. The Dow Jones US Dividend 100 Index is comprised of around 100 companies that have a history of consistently paying dividends, a track record of strong financial performance, and a history of raising dividends over time. Now, the ETF has gained some serious popularity over the past years, and this is largely due to things like the dividend focus. The fund focuses on dividend-paying stocks, which can be appealing to investors that are seeking income-generating assets. Also, the fund is very cost-effective. The management fee is low, the fund is well-diversified, and the dividend growth is insane, but we're going to go through all that and more in a second here. Now, SCHD is currently trading at $74.57, and even though that is towards the higher end of the 52-week range, being $65.96 as of the low and $79.49 as of the high, for a long-term investor like myself personally, I've still been buying shares of SCHD pretty much every single day, if not every other day in the market over the past few months. And this is because I believe in SCHD's overall methodology and the strategy of the ETF. And if history were to repeat itself, SCHD should be hitting some new all-time highs as far as ETF share price in the up and coming months, if not in the up and coming years. And as a relatively younger dividend growth investor, I definitely have some time, and I'm more than willing to wait and collect a nice dividend along the way. Now, one of the main reasons I would choose to hold onto this ETF rather than others is because of the fund strategy, how it chooses its holdings. And of course, with my personal risk tolerance, the diversification would definitely help me sleep well at night. The breakdown is as follows. Industrials 17%, healthcare 15%, financials 14%, technology 13%, consumer defensive 13%, consumer cyclical 9%, energy 8%, communication 4%, basic material 1%, and utilities under 1%. Now, SCHD has a very strong list of top 10 holdings if you were to ask me. We have companies like Broadcom, Pepsi, Cisco, Merck, the Home Depot, Texas Instrument, Coca-Cola, Chevron, Verizon, and Pfizer. Again, the basic strategy of SCHD is to pick companies with a strong financial background and companies that pay and grow dividends over time. Now, speaking of SCHD's dividend, the current dividend yield is around 3.49%. And keep in mind, SCHD is going to be paying another dividend pretty soon here, so the future trailing 12-month payout percentage is going to depend on what the next few dividends, of course, are. But regardless, SCHD's trailing 12-month dividend growth rate, which is how much the dividend has grown over the last 12 months, is at 7.13%, which is on the lower end of what we've seen as far as SCHD's dividend growth over time, Considering over the last 3 years it's 12.33%, 5 years it's 13.92%, and 10-year 11.32%. But really, regardless of whatever time frame you look at when it comes to SCHD's dividends and how much they've paid over time, the dividends have been getting bigger and bigger consistently over the last 10 or so years. Now, the fact that SCHD does pay a strong dividend and has for several years now is very important to my individual investing strategy. My specific investing strategy is to acquire more and more high quality assets, which can of course be individual stocks and or ETFs that not only pay a dividend on a monthly or quarterly basis, but also has a strong history of doing so, and of course lastly, a history of raising their dividends over time. Because years from now, if you're getting paid more and more consistently from the assets that you purchased years ago, that's only going to make your wealth snowball larger and larger, quicker and quicker. And again, for me personally, this is just my strategy. I really favor cash flow. I dream of building a portfolio where all the dividends from all the different stocks and ETFs to be able to cover my bills and really cover whatever expenses I want to have in the future. So an ETF like SCHD definitely has the ability to do so. Now lastly, the obvious reason that I would choose SCHD as my only ETF just for this thought experiment would be because of the dividend growth history. Now, dividend growth calculates the annual average rate of increase in the dividends paid by a company. And as we can see here, historically speaking, SCHD in 2012 paid around 81 cents USD for the whole year of dividends. 2013, around 90 cents. 14, 105. 15, 115. 16, 126. 2017, SCHD paid $1.35 per share per year. 2018, 144. 2019, 173. 2020, 203, 2021, 225, 2022, it paid $2.56, and of course, so far in 2023, the year of dividends is yet to be determined. But as we see right here in the chart, an investor that bought into SCHD years ago is getting paid more and more year after year for just holding on to that same simple ETF they bought long ago. And of course, the idea is that if you were to extrapolate and just go off of the previous dividend growth rates, you can see that in the future, SCHD could most likely pay much more in annual dividends than it did historically. Now again, this is exactly what can really supercharge your portfolio and allow your money to really work hard for itself. Because not only are you holding on to an ETF that has a history of capital appreciation, but also a history of raising their dividends over the past 10 years or so. If you enjoyed this video, make sure to please drop a like on the video and subscribe for more content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.